Your unique story, our global audience. Global One Media.
Welcome to Global One Media's exclusive one-on-one interviews with company executives sharing insights into their unique journey, a platform to help our viewers make informed investment decisions. I'm your host, Ashley Berry, and today we're very excited to welcome Brett Richards, CEO and Director of Goldshore Resources. Brett has more than 3 decades of experience in mining and metals, including mine financing, mine development, and senior level operations. Goldshore Resources is an emerging junior gold development company that owns the Moss Lake Gold Project in Ontario, Canada. They are listed on the TSXV as GSHR, the OTCQB as GSHRF, and the Frankfurt Exchange as 8X00. Brett, welcome.
Thanks, Ashley. Thanks for having me on.
It's a true pleasure. For our viewers who are not familiar with Goldshore Resources, perhaps you could give us a brief overview about your vision and the team of talented experts.
Yeah, thanks, Ashley. Our vision, my vision for this company is to be a leading junior mining developer and project generator in Canada. That's what the junior mining space does. It prepares projects for the next advanced stage of development, getting ready for production. So for us, Goldshore is about creating sustainable value for our shareholders and to inclusively respect all of our stakeholders and project partners along the way so that we can responsibly explore for mineral opportunities. And yes, we are focused on gold. We own the Moss Lake project in northwestern Ontario. Today, it has a current mineral resource of 4.17 million ounces at 1.1 grams. But the real story that is emerging is contained within that 4 million ounces is over 50% of it is high-grade material. So we have 2.2 million ounces at 2 grams. And for open pit development projects, 2 grams is considered high-grade. So we have embarked on a development program over the last 2 years. We have raised over $60 million to support the project. And we are currently working towards 2 major catalysts this year, which the first one will be out at the end of April, which is a secondary mineral resource estimate, which is going to encapsulate our project. And the second one will be a PEA, or a preliminary economic analysis of that encapsulated resource at Moss.
Terrific. So when you give those really impressive numbers for a potential investor, how is this company attractive to them just based on what you're talking about? And of course, moving forward and maybe some of the next milestones.
Yeah, for sure. I'm a big mining investor myself. So I look at this company, I look at all of the companies I work for, but I look at this company as would I invest in this company? And why would I invest in this company? And that's what attracted me to coming to Goldshore to be the CEO, is because it ticked many boxes for me. There are 5 key attributes when evaluating and valuing mining projects. First of all, it's about the team. And I think we've assembled one of the industry's leading kind of board and management teams with a balance of experience, youth, and knowledge across all aspects of our sector, whether that be capital markets, whether that be ESG, whether that be the finance market, et cetera. And we have people, including myself, who have built mines before. My VP of exploration, Pete Flindell, he and I have built 2 mines together, and I've built 3 mines in my career. So this is something that we can do. So we have the team. The second key attribute is about the location or the place. Where are we located? We're located in Ontario. From a jurisdiction standpoint, it doesn't get any better than that in the world. And the third thing is size and scale. And as you understand the Moss project and our land package, you'll quickly understand that the potential is extremely large. We have drilled less than 10% of our targets, and we have this massive endowment already that's going to grow in April when we put out our secondary mineral resource estimate. The fourth thing is access to infrastructure, what I call the doability factor. Are you able to build a mine there? Do you have the power and the road and the rail and access to people, et cetera? And as you'll find out, Moss has all of the available infrastructure to it. And the last thing is grade, the quality of the asset. And I think we have one of the highest grade open pit development projects in Canada. So we tick every box when valuing kind of a project. So the investment thesis is quite compelling when you start comparing us to our peers. You start comparing us to, I'll say, other mining companies globally, and you quickly understand that the investment thesis here is quite compelling.
Fantastic. Really helpful, Brett. Thank you for breaking that down for us. You touched briefly on the capital structure. Maybe you could give us some details about the current capital structure and your need to raise capital in the near future.
Sure. We have just announced a financing, I'll say recently, about 2 weeks ago. We will be closing that financing quite shortly. Probably around the 12th of April, we'll raise around $6 million at 17 cents. It is obviously a very low share price for us to be raising at, given the macro and the geopolitical situation in the market today. But we don't have much of a choice. We need to continue to develop this project, and I think that's one of the most important things that we need to continue on with momentum. So we will put this financing away. We'll have about 6 million, maybe just over $6 million in the bank. So from a cash standpoint, we're well funded out through October, November. But I think the real compelling thing here is how we are valued to our peers. We are trading at $6 an ounce in the ground today, and that is before we put out a mineral resource update at the end of this month, whereby we're guiding the increase in our resource to go from 4 million ounces to 6 million ounces, which means that we'll be trading at $4 an ounce. We have a peer group that trades at $30 an ounce and a high-grade peer group that trade at $80 an ounce. So there is substantial investment accretion possible in the very short term, in the medium term, and also in the long term for people to invest in Goldshore Resources.
Certainly impressive. Any other updates or catalysts that investors should know about?
I think, when looking at this market, and it is the most volatile I have seen in 37 years, the difficulty in raising capital is the hardest I've seen it in 35, 36 years. And quite frankly, I don't think it's going to get much better in the short term. Although the outlook for gold is very strong, we're going to see a trading range of kind of $1,900 to $2,400 now for the foreseeable future. I had a lower trading range last year, more like $1,800 to $2,200. So the environment for gold is quite good. But we have two major catalysts that we're going to be putting out. Again, this mineral resource update at the end of this month. That is going to be a major catalyst for our share price. As well, we have the PEA, or the economic analysis of that resource, so whereby we can have a different method of valuation. If we generate 200 million of cash flow a year, we can be trading at 2 times cash flow. That's a very kind of equivalent type of valuation metric that are used at this stage of development. Also, 0.3 times NAV. NPV. So if we have a net present value of $1 billion, 0.3 times, that's more like a $300 million company. Today, we're under $30 million. So we have a lot of scope to grow the valuation of this company in the short and medium term. So these two catalysts that we have, I think, are going to really drive the market and drive the share price. Even in this volatile market, I think we're going to see tremendous accretion in our share price.
Fantastic. Really love the energy, enthusiasm, and of course, confidence in the company. Brett Richards, CEO and Director of Goldshore Resources. Thank you so much for your time and for sharing these really exciting updates. We look forward to sharing more with our audience.